World tariffs. Getting worse and bleeding? Listen up. The United States, under the Trump administration, has embarked on an aggressive trade policy, imposing tariffs on goods from numerous countries. This protectionist approach, aimed at reducing trade deficits and promoting domestic industries, has sparked controversy and retaliation from major trading partners, most notably China. The administration argues that these tariffs are necessary to protect American jobs and intellectual property, often accusing China of unfair trade practices. This escalating trade war reached a fever pitch in early April 2025, when the U.S. announced a new round of tariffs on Chinese goods. These tariffs, effective April 9, 2025, target a wide range of products and impose a staggering 104% levy on their value. This move signifies a significant escalation in the ongoing trade dispute between the world's two largest economies. Proponents of the tariffs, including President Trump and members of his administration, argue that they are essential to level the playing field and force China to adopt fairer trade practices. They point to China's long history of intellectual property theft and forced technology transfer as justification for these aggressive measures. However, critics argue that these tariffs harm American businesses and consumers, driving up prices and disrupting supply chains. The tariffs have been met with strong condemnation from the international community, with many experts warning of a potential trade war that could have devastating consequences for the global economy. The situation remains fluid, and the outcome of this high-stakes trade dispute is uncertain. China wasted no time in responding to the U.S. tariff hikes. On April 10, 2025, Beijing announced retaliatory tariffs of 84% on a range of U.S. goods. These tariffs, carefully calibrated to inflict maximum economic pain on key American industries, target agricultural products, automobiles, and machinery. This tit-for-tat exchange of tariffs has sent shockwaves through the global economy, raising fears of a full-blown trade war. Beyond tariffs, China also announced restrictions on 18 U.S. companies, mostly in defense-related sectors. This move, adding to approximately 60 U.S. companies already facing restrictions in China, further escalates the economic conflict. China's finance ministry condemned the U.S. actions, accusing Washington of bullying practices and undermining the multilateral trading system. Chinese officials have repeatedly emphasized their willingness to negotiate a trade deal but insist on the principles of mutual respect and reciprocity. They argue that the U.S. is acting unilaterally and engaging in protectionism, which harms both countries and the global economy. Despite the escalating tensions, China has left the door open for dialogue, urging the U.S. to reconsider its actions and engage in constructive negotiations. However, with both sides digging in their heels, the prospects for a swift resolution to the trade dispute appear increasingly dim. The escalating trade war between the United States and China has sent shockwaves through global financial markets. Stock markets worldwide have tumbled, with the S&P 500 entering bear market territory after plunging nearly 20% from its recent peak. The Dow Jones Industrial Average and the Nasdaq have also experienced significant declines, reflecting growing investor anxiety over the trade war's potential impact on corporate profits and global economic growth. The uncertainty surrounding the trade dispute has also triggered a flight to safety, with investors pouring money into U.S. bonds, driving down yields. This surge in demand for safe haven assets like U.S. Treasuries is a classic sign of market stress and underscores the growing fear that the trade war could tip the global economy into recession. Oil prices have also been hit hard, with Brent crude, the international benchmark, falling sharply as investors worry that a global economic slowdown will dampen energy demand. The trade war's impact is being felt across a wide range of commodities, with prices for copper, soybeans, and other raw materials also declining. The global trade war is creating a climate of uncertainty and volatility in financial markets. Investors are left grappling with the unpredictable consequences of this high-stakes economic standoff, leading to a risk-off sentiment that is depressing asset prices and raising concerns about the future of the global economy. The escalating trade war between the United States and China has raised serious concerns about a potential global recession. The International Monetary Fund, or IMF, has warned that the tariffs, if fully implemented, could shave 0.5% off global economic growth in 2025. The IMF also cautioned that the trade war could disrupt global supply chains, increase business uncertainty, and dampen investment, all of which could have a chilling effect on economic activity worldwide. The Organization for Economic Cooperation and Development, or OECD, has also downgraded its global growth forecasts, citing trade tensions as a key risk to the economic outlook. The OECD warned that the trade war could lead to a lose-lose scenario, harming both the US and Chinese economies, as well as those of their trading partners. Economists and analysts are increasingly concerned that the trade war could trigger a global recession. They point to the interconnected nature of the global economy, where a slowdown in one region can quickly spread to others. The trade war is already disrupting global supply chains and weighing on business confidence, which could lead to a sharp decline in investment and consumer spending. The escalating trade war between the United States and China poses a significant threat to the global economy. The tariffs, if not resolved soon, could have a cascading effect, leading to a slowdown in economic growth, job losses, and a decline in living standards worldwide. The situation requires urgent attention from policymakers to prevent a further escalation of trade tensions and mitigate the risks to the global economy. Please subscribe to my channel to get fresh news every day.